Not because the trade didn't look good, which indeed it actually did look good. Okay, it was a valid trading setup from a technical point of view, but I decided not to take it from a risk-reward ratio point of view. Okay, the average daily range projection, as you are gonna see in a minute, was almost met, and by the time I took, or by the time my magic dot indicator signaled the entry, well, I feel that I was about too late, I am afraid. I was a little bit too late to this party. Anyway, let's go step by step, shall we? First of all, let me try to explain the setup as a whole. Now, let's see what we have here on this particular chart. Well, again, we are looking into the Australian dollar against the American dollar, 1 hour time frame. And as I was analyzing this chart, okay, this morning, I kind of recognized two key areas in, as per the last few days. Obviously, we have this clear area here, okay, former resistance there, resistance, 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 resistance. Okay, certainly a heavy area of resistance around that area, the 0.9220 more or less. Then that level got broken, okay, and price came back down to retest that level from above, right? So price came back down to retest that level, and we indeed found support of this area once again. Okay, this is the concept of former resistance. Former resistance, once broken, now turns into support, and from there, well, we got a valid bounce, and I am positive, 100% sure, that on the 15 minutes time frame we would have gotten a valid entry as per the magic dot indicator up on this bounce there. Okay, anyway, so from this bounce on, price rallied to a whole new area of resistance. Okay, resistance, resistance, resistance. Do you see that? But price tops out at that level, again tops out at that level, and for a third time we find price topping out at that level once again. To be more specific, that's the 0.9290 more or less. Okay, 0.9290 resistance, resistance, resistance. So eventually, obviously, we want to mark that level, that area once again. Eventually, price breaks free, okay? Price pushes through that level in the direction of the entire trend, okay? Meaning to the upside. Price breaches through that level. Let me actually now zoom in a little bit more for a clearer picture. All right, and up on the breakout, what do we get? A pullback, driving price to retest that area once again, just as it did here. Let me scroll back now. Do you see how here we got a breakout, a pullback, and price came down to retest that area? Well, here happened more or less exactly, a pretty similar scenario. We have a valid breakout, momentum breakout. Please take a look at the momentum breakout candles, okay? 3 beautiful breakout candles, in momentum. Actually, let me zoom in once again. All right, breakout candles with long bodies, short wicks, both up and down, all right? Basically, we have a momentum breakout move, okay? And now, please look at the type of breakout move we got on the previous breakout. Do you see also this nice breakout move with those solid bars? Okay, long bars, green bars with long bodies and short wicks, both up and down. Okay, the majority of the candle is formed by the body in itself. Okay, not by the wicks, but by the candles. That means that this is, or chances are that this is going to be a breakout that's actually happening in high trading volume. Okay, basically a valid breakout. All right, so we got the same thing here a few hours back. Then price came back down to retest that level, and from there, as price was retracing down to retest that former level of resistance, now support, well, that's where I was assuming to the 15 minutes time frame, right? And this is what I saw on my 15 minutes time frame. Let me now scroll to the right side of the chart. Okay, That's the signal I was talking about. That was my entry signal. All right, price comes. Okay, we have the breakout, then we have the pullback, price comes all the way down there, and as usual, we are to, well, obviously, if price breaks below that level, we stop searching for our opportunities. We obviously want to see bounces of those areas. So if we do get the bounce, what we are to do is to simply wait for the magic dot to give us the signal, and then, well, to wait for the close of that specific candle, again on the 15 minutes time frame. So as this candle closed right there, as I was to actually click on my buy button, well, I kind of took a second look into this chart, and I noticed that the average daily range projection, which is up there, actually, let me go back into the 1 hour time frame for a clearer picture. No, sorry about that. Let me go back into the 15 minutes time frame. I'm sorry about that. Anyway, all right, there we are. So, as my signal came in, which was right there, as you can see, the full average daily range projection was not that far away, was it? I mean, my signal would have come in at 0.9315, more or less, okay, 0.9315, and the average daily range projection, the 100% average daily range projection, was at 0.9326. So from 0.9315 to 0.9326, well, that's about 11 pips only, isn't it? Do you reckon it's worth getting involved in a position, getting involved in a trade for just 11 pips? I mean, seriously? Now then, if you take the spread into consideration, which it's about 2 pips on the Australian dollar, 2-3 pips depending on your broker, but around there, 2 pips for the Australian dollar against the American dollar, that means that you are shooting for just 9 pips. Well, I don't know about you, but as far as I am concerned, there is no point in taking any trade for just 9 pips. The risk is not worth it. Okay, so from an average daily range perspective, this trade was certainly not very efficient. But from a risk-reward ratio point of view, it didn't get any much better actually. If that was my entry, and that was my stop loss, let's imagine I was to shoot for the entire average daily range, which I particularly like to be a little bit more conservative than that. I usually like to shoot for around 80-85% of the entire average daily range projection. But let's imagine we are indeed aggressive traders and we are shooting for the entire home run. Okay, we are going for the 100% of the average daily range. So we would locate our profit taking level around this black line, okay, representing again the 100% of the whole thing. So if that's my entry and that's my profit taking level, this is my reward. And if that's my entry and that's my stop loss, this is my risk. All right. As you can see, the risk is larger or greater than the reward. So again, I must stress my question. Do you reckon this is a trade worth taking? Well, no, it is not. It is not. It's a trade that's best to let go. It's just not an efficient trade. I mean, sure, from a technical point of view, we have everything in place. I mean, this is a perfect setup from a technical point of view. Again, let's go back into the 1 hour time frame. We have a clear level of resistance, okay, a key structural point throughout the week that eventually got broken today and came back down to, and price came back down to retest that level. So hey, again, from a structural point of view, this is looking dandy good. This is looking fantastic. Moreover, we did get the bounce, okay? And on the 15 minutes time frame, we did get the signal. I mean, everything was in line. But, as I was mentioning before, we were too late for this party. Or rather, not us. The entry signal, okay? The signal came just too late. It came in way too late as far as the risk-reward ratio, as far as the average daily range projection, etc., etc. And in fact, if I go back into the 15 minutes time frame, and in fact, let me now zoom in a little bit more. as you can see, price indeed ran out of steam at the average daily range, as actually it peeped, okay? It peeped the average daily range projection line as per my indicator, okay? And well, it totally ran out of gas, and what did we see from there? Another move down. All right, and in fact, from there, as price touched the average daily range, the statistical average for the next 15, 30, 45, 60 minutes, for the next 1 full hour, price has been doing nothing but moving sideways. Okay, again, because it's just run of statistical use. Okay, it's run out of statistical gas. There is no more gas on this tank. We've covered the average daily range, and therefore chances are we are gonna see a stagnant market all day long from now onwards. Okay, so again, the point of this video, even though I didn't take this trade, I think it's worth recording this specific video just to stress on the fact that, again, just because you have a trade that's valid from a technical point of view, that doesn't mean that from a money management point of view, okay, from a common sense point of view, that's a trade worth taking. Okay, so please, guys.